Good morning, good afternoon, and good evening. It's Friday, December 16, 5:41 p.m. here in Texas. This is Mark Yu,
And Wawi Santos.
and welcome to your weekly Mark Yu and Wawi show, episode 65. Christmas rally?
More
So,
like Christmas depression.
Christmas expression. For those who are just joining us, a little bit of introduction. Me and Wawi are both physical therapists here in the USA. We have the same passion and interest in investing our hard-earned money in the stock market, and we tackle the Wall Street sentiments and some of the latest news that could affect our investments and help us guide, moving forward. We are not registered financial planners or whatsoever, so don't take our advice as a professional advice. Always consider consulting with a registered financial planner. So, Christmas rally or not? Christmas rally, according to Investopedia, it's also called as the Santa Claus rally. It refers to the tendency of the stock market to rally over the week leading up to Christmas. So currently we're on the last few days. It's December 16, one more week and it's Christmas Day. So it's some sort of a play in the psychological aspect of investing in stock market, investing that the stocks will go up during this week, as what it did last year, right, Wowie? I think if I
Mhm.
remember it correctly, last year we had a good rally leading up to the stock market. I mean, to Christmas Day.
Yes, we did, but I think the Grinch showed up early this week.
Yeah. So yeah, basing it on historical performance from 2002 to 2021, which is last year, historically the stock market is up by just a small positive average return of positive 0.385% leading up to Christmas. So it doesn't make any big difference if it goes up or down. But right now, we're feeling more of the negative side of things. All right, so we're just going to take a look at the American Association of Individual Investors Sentiment Survey. So this is a weekly survey that gathers information of what does U.S. stock market investors feel like if the stock market will be up or down in the next 6 months. But interestingly, it varies on a week-to-week basis as they gather this intelligence or survey. So as of a couple of days ago, December 14th, the latest survey where bullish investors are 24.3. Not much of a big difference from a week prior, 24.7%. Whereas the bearish investors, there are more of them, almost 3% more. From 41.8%, now we're at 44.6%. More people are getting more bearish. Consider this, for the last 4 weeks, we are 10 percentage more or close to the 10 percentage more higher than historical average of being bearish. So meaning people are getting more negative in terms of their outlook in the stock market. So for our fear and greed sentiment, so currently we are 42 or fear. Whereas not so long ago, we were at greed territory. I think a couple of weeks ago, we were at greed um, past mid November to first week of December. So a little bit of a negative momentum. Oh, look at this, Wowie. Now we have again broke through that 125-day moving average. So for a while, we've been trending up as me and Wowie have been tracking this. This is the S&P 500 and it's 125-day moving average. So it's an average of at least 4 months. I bet this is the longest that we've been in the positive side, and then now look at that, we have pierced through again, leading to the downside. It has been at least quite a wild ride. So since November 9 to December 16, wow, that's the longest since the start of the year that we have stayed positive on the momentum side of things. But now, behold, as you know, Christmas rally, I don't think it'll occur or we will see that rally this year as we have now pierced through this average. Stock price breadth looks like people are still actively buying, selling stocks, which indicates a good market activity. Putting call options. Putting call options still a little bit on the fear side of things. People are buying more put options, meaning they'll have some sort of a benefit or profit if the S&P 500 goes down. Volatility index, interestingly, despite us piercing through the 125-day moving average, the volatility index remains a little bit on the calmer side of things at 22.6, barely piercing through the 50-day moving average. So this is an interesting finding right here. So we have yet to see any actual fear in the market. I mean, people buying volatility or betting that the volatility will even get worse. We're not even at that point yet. So quite an interesting move. So if we're gonna take a look at the past week performance, yeah, volatility, it's down negative 6.8%. That's quite weird, right? Well, you'd see volatility spiking up if the stock market goes down, especially for the past couple of days since the Federal Reserve came out with their hiking 50 basis points as was what's broadly expected.
I think there's very strong forces from the short-term traders.
Mm,
A lot of short-term trading going on. As you can see, if you're trending, higher volumes occur,
mm,
in the morning, and then before lunchtime, you can see the volumes depress, and those volumes increase again later in the evening if
yeah.
you're looking at trade volume. So I think there's a lot of short-term trading going on right now.
Yeah, and if I remembered correctly, I read an article yesterday that today was actually a lot of options expiring as of this morning, Friday. I think it's over $4 trillion options. It's what they call quadruple witching that have expired that provides a support on the S&P 500 as a whole. So right now we're gonna take a look at the performance of the sectors for the past week. Believe it or not, energy is the only
Mhm.
positive sector this week.
Yeah,
And
I
all
believe it because it's the only sector that's been positive all year
since
long.
the start of the year, that's correct. Since the start of the year, energy is up 34.75%, while the rest, utilities, name it, basic materials, healthcare, financial, real estate, technology, obviously, all are down in the drain, down in the toilet. But yeah, interestingly, energy is up and the rest are down for the past week. So this is a chart from Bloomberg, just sharing it here. Analysts can't keep their positive insights. We are now seeing earnings projections being cut left and right since June of this year. So this is actually not a good sign if you're a heavy long-term investor, believe it or not, because you want to see companies generating profit. And at this point in time, the forecast has been going down. But analysts always gets their projections incorrect unless they get lucky and strike it correctly. So we are now at the low point since, believe it or not, May 2021. Something to watch out for. If we're gonna look at the S&P 500 at where it was back in May 2021, it was at May 2021. It was at around 4,100. Wow, okay. So we're actually 300 points lower than that now. So I thought it was still way down, but hope this just correlation, no to causation, but some sort of highlighting how much the sell-off has been since since the Federal Reserve came out with their 50 basis point hike, widely expected. So now we're
Yes.
just gonna take a look at the S&P 500 valuation. So S&P 500 as a whole is now its forward price to earnings ratio, which is looking at its earnings next year adjusted compared to its current price, is 17.3 times. So it's been quite a drop from 22 times back when it was booming last year. So 17.3 times forward earnings projections. Mm, its PEG ratio, it's at 1.6. So for those who are not aware, Peter Lynch likes to value a company basing it on its PEG ratio. The lower the PEG ratio, the better. But currently, it looks like even though that the price to earnings ratio have climbed climbed down a little bit, the PEG ratio have came up, meaning that there's still some premium ongoing in this market. So we're gonna jump on to the next biggest thing in the stock market, the FANG, or now they're saying that it's going. This FANG fad has finally given way since it's the worst performing um in the industry since the start of the year, the tech sector. So the FANG stocks, their market cap is now down to $6.7 trillion, whereas at high point, I think it's close to almost $11 trillion. So that's quite a big difference there. 11 minus 6.7, that's about $4 trillion wiped out for the FANG stocks. FANG meaning these are companies Alphabet or Google, Amazon, Apple, Facebook or Metaverse or Meta platforms, Microsoft and Netflix. Their market share of the S&P 500 is down to 17.7% from I think we've been tracking this Huawei since last year where it was above 20 or 23% even um, as a market share of the S&P 500. Now it's less than 20. It's down to 17.7% as a
Mm-hmm.
whole.
Mm-hmm. And that's a good sign. That would make the S&P 500 index more of a good investment.
Right. Good point. Good point for sure. A profit margin. So let's see who's the most profitable on the group. It's the one on the red. That's Microsoft. 34.5% profit margin, meaning per $1, they get to keep more than a third as profits. Followed by via purple, Apple. Apple at 25 cents a dollar. Followed by who's the green one? Google, 23% profitability. Followed by dark green. Meta Platforms, believe it or not, who's down more than 60% this year, 18.5 cents a dollar. And then next would be Netflix. Netflix is even more profitable now than Amazon at 14 cents a share of profitability. Amazon, they get to keep 3 cents a share, very little. So the FANG stocks, their forward price to earnings as a group, it's still quite expensive. It's 22.3 times earnings. But believe it or not, it was a high as 35 times back in the boom eras of 2020, the latter part of 2020 to 2021. From 35 times, now they're down to 22.3 times. So quite a drop. Among the group, the most expensive among the group is obviously still Amazon at 53 times forward earnings, and followed by Microsoft. No, Amazon is the most expensive one, followed by Netflix at 30 times earnings, followed by Microsoft at 23.7 times earnings. So, in summary, the cheapest one among the group is Facebook or Meta Platforms at nearly 15 times earnings. So, just a random screenshot here. Looks like the Philippines, where we came from, yours truly, is experiencing a lot of inflation itself over there. 8%. And it's quite ramping up, which is not good. It's the only country in this chart, oh, along with Vietnam, that are increasing their inflation rate. So the banks over there, they said I think they're gonna keep hiking. They're not thinking of slowing down their rate hikes at this point in time to control the inflation. So inflation is rampant everywhere worldwide. That's something to take note of in case US dollar gets stronger and Philippine peso would probably tend to go even lower. Central banks. So this is globally. A screenshot from Refinitiv. Policy rates of central bank overseeing the 10 most traded currencies last 12 months. So US leads the way in terms of their goals or policy rates in hiking up rates above 4%. I think it's 4.25 to 4.5 right now, right, Wowie? Or even more than that?
I think you're right on the money there
Mm,
for the interest. Yeah.
the target. That
Hmm.
brings into mind the current mortgage rates as well. If you're going to take a look at the mortgage rates. All right. It's been going down since, what is this? November. As high as 7.29% back in November. Now we're down to 6.17%. But it's still way up there compared to history, recent history. So I'm hearing a lot of podcasts advising people to go into debt and buying housing market or doing whatever they want as an real estate investor, and then betting that the interest rates would go down sometime next year to refinance. So be careful on that, because if the Federal Reserve doesn't tame their inflation, tame their rate hikes, it could well go into the latter part of next year where interest rates would be still elevated and not
Yeah.
going down.
Yeah, funny you mentioned that because it's the same thing. We went and bought a new car,
Oh wow.
and
Mm-hmm.
that was also one of the insights of the finance officer that we were talking to,
Uh-huh.
the loan officer. He said, "Well, you can go ahead and apply for refinancing next year because most likely the rates will be lower." So that's
Mm-hmm.
circulating a lot, around the loan business,
Yeah.
that is possible that things would go down early next year.
Mm-hmm. I think early next year is quite early to say. That's the thing, right, Wawi? Whenever everybody expects one thing, the market surprises us with another thing. So
That's
it
right.
yeah, it's quite tricky. I don't think that's gonna happen anytime soon, like rates going down. Jerome Powell is quite stern on his outlook, so
He
he
is the
does
Grinch, really.
yeah, he does think that there's more to come, or he does show that on his words. So regardless, it's hard to predict what's gonna happen and whatnot. But yeah, so here we are looking at the Wall Street Journal update here a couple days ago. Dow Industrial touched bullish golden cross. So Dow Jones, these are the top 30 companies, that select few that a panel selects. So this doesn't really broadly demonstrate or take into account the whole market performance, unlike the S&P 500, because they're just 30 stocks. But it did cross the golden cross, which is a bullish sign for most investors. But remember, it also did this back in March 7 of this year. So it doesn't mean that if it crosses, it will go see a market rally or return of the bull market. So just a good FYI, I guess.
Well,
But
those
nothing. Mhm,
yeah, those technical analysis are actually pretty precise. Reflect, just looking back, because
mhm.
the same bullish cross happened in June for the S&P 500.
Oh, it did?
Mm-hmm.
Oh, well, that's good. Well, hopefully we see that soon in S&P 500. I don't think soon though, because it's been quite a sell-off since yesterday.
Mm-hmm.
So biggest inflation movers. This is data from Bloomberg compared to January. These categories have seen some of the largest gains. Obviously, fuel oil 70%. Eggs, 48.7. Yeah, you get the point. Butter, margarine, airfares, flour, public transportation, lettuce, frozen bakery products, salad dressings, canned fruits, vehicle repair, cakes, cookies, ice cream, bakery products, pipe gas services, dairy products. So a lot of stuff are still up there. So I don't think this is as of December 13. So you know how Jerome Powell sees that. So he wants to see them lower. Even stock market, I believe he wants to see it even lower than where we're at right now. So S&P 500, let's start with Dow Jones. Dow Jones, even though they crossed the bullish golden cross mark, they are down 1.79% for the past 5 days at 32,920. Nasdaq, this is the company. Nasdaq index. Let me see if I can pull it up. Nasdaq index is down 2.81% for the past 5 days. And our favorite S&P 500, it's down 2.21%. Let's see for the past month. Yep, it's been trending down. It reached its highest in its recent rally from end of September to end of November. That was the peak there, guys. So we've been trending down since. So I heard you. I saw that you, wow, you're still in the market. You're not selling out on the market, right?
Yeah, I'm still fully invested, and I'm actually buying a lot more
Mm,
uh, at this downtrend. Not necessarily timing the market, but just allocating my deposits
mm.
to certain bargains out there in the market. And Tesla is down by a bunch, and I found myself buying almost a couple of shares today
Mm-hmm.
on that because it's down to $150 right now.
Yeah, I think
um,
one of the analysts projects for it to be valued at $50 a share as its floor. So I
mm-mm,
don't know. That's pretty pessimistic. So you want to actually see those type of calls when you're buying a stock. Because if you really
mm-mm,
believe in a stock, it'll find its way and recover. Then it's a
mm-mm.
good time because people are getting pessimistic.
Well, if you can look at what's happening with the FANG stocks, at one time they were growth stocks.
Mm-hmm.
And if you look back in history, you would see that the FANG stocks has not really suffered a major recession
Yeah.
until recently.
Yeah, they're still generating profits, believe it or not. Meta Platforms has over 40, $50 billion in cash and $10 billion in debt. But
Uh, the,
people are getting out of it because, the founder is just focusing on one thing, which isn't
mhm.
good for the company.
Distracted, yeah,
Yeah.
distracted, they say. But looking at Facebook, Microsoft, these very strong S&P 500 companies we call FAANG stocks now.
Hmm.
They really haven't seen any of this significant downtrend and possibly a major recession. So what I'm saying is this is something new for these big stock market companies that hold the S&P 500, you know, its market cap, as you mentioned, above 20%,
Yep.
representing the S&P 500.
Yeah.
Um, so so people are just moving to defensive sectors, those um, safe zones. But
Mhm. Like
I'm
healthcare and
still a
utilities. Hmm.
but I'm still a growth investor.
Yeah. Likewise, I'm still very exposed to the market as well. I haven't bought anything though in the past couple of weeks. If anything, I'm still looking, still waiting for good timing. Google right now is about $90 a share again from $97 a week ago. So it's been quite a sell-off for sure. Here we have a chart from Bloomberg. Tesla valuation drops below $500 billion. Believe it or not, at one point or several times within this year, Tesla was actually more than $1 trillion.
Mhm.
At high point, it was even a little over $1.2 trillion back in last quarter of last year when we were experiencing rally after rally, new all-time high after all-time high. So now it has lost $700 billion or even more in value in less than $500 billion right now. Primarily because of the, sell-off in the market and also at the same time internals. Elon Musk just selling parts of it, bits and pieces. I'm not sure how much he's sold. Do you have an idea, Wabi? I think you shared it in the group.
Yeah,
Just for the
recently
last couple months.
he sold $3.6 billion or 2 million shares, I believe.
Yep, that's a
And I
bunch.
think, yeah, that's a bunch. I think that's to cover the expense of buying Twitter.
Mm-hmm. Yep. Right now, I think since the start of the year, I think he already sold like $40 billion worth of Tesla shares, right?
Yes.
And he purchased Twitter for 44. So he's just probably trying to make Twitter work, financing it with his deep pocket.
And there's
Oh,
quite a bit of
mhm,
shakeup in his company that he's getting CEO Tom Zhu to take care of operations while
yeah,
he's on the sidelines.
yeah. He needs to focus more on elsewhere because it's not just Twitter he's trying to have survive. He has Tesla and SpaceX and Boring and other big companies that are changing the world.
Yeah, so if you're an investor, that's good to look at the brand, and how the brand is attached to a person or to a symbol. And right now, Tesla is heavily branded with Elon Musk.
For sure, yes. So going to the real estate, um, a brief. We're gonna tackle real estate quickly here. Where is that? There we go. So this is a Redfin data. It's just highlighting one of the largest or at least growing cities here in the US, which is Austin, where Tesla actually moved its headquarters to. So the median price in Austin has now dropped nearly 20%. So that's a good bear market indicator right there in housing. From $574,000 a home in Austin, it's now down to $468,000. So that's just an indicator there that, house prices are now being hit by higher interest rates and lower demand. So,
Yeah, so it's starting to show cracks even in the job market. Unemployment rate has gone up
mm-hmm.
in 11 states. So that's a good sign as far as what the Fed Reserve is targeting.
Yeah, they're wanting 5% unemployment, but it's going to be a lot of jobs not being provided or a lot of companies slowing down for sure. So, we almost forgot about the fund flows in this segment. So, this is the fund flows. We also take a look with try to follow where the money is going. So, this was just published this morning, December 16, 6:39 a.m. by Reuters. Global equity funds draw first weekly inflow after 5 weeks. What? So these guys who just put their money in the stock market this week got clobbered bad because the stock market sold off. So following the money really isn't the best at this point in time. So according to Reuters, global equity or stock market globally attracted their first inflow in the last 6 weeks, where investors were optimistic that easing inflation levels would prompt central banks to scale back the pace of rate hikes. Nonetheless, I think they got surprised as of yesterday as of Wednesday, when Jerome Powell decided to hike 50 basis points and said those words that, you know, investors thought otherwise won't be said. So, nonetheless, investors poured net $1 billion in global stock funds.
I think
And
they
they're,
were betting on a pivot
yeah,
last week,
exactly.
and there's also a lot of inflows into ETFs.
hmm Yeah, US and Asian equity or stock funds drew a net $3.4 billion and 500 million respectively in inflows, while investors exited European funds to a tune of about 2.14 billion dollars. So which sectors receive a lot of flows? Financials, consumer staples, and materials. Meanwhile, sectors who experience a lot of outflow, of course, tech with with 839 million. So investors are still not done with their tax loss harvesting, looks like. They've been still selling tech until even the last few days of this month, the last few days of the year. They're still selling tech.
And if you believe in the technology sector, then this may be a good time to, invest in them while things are going down.
Yeah. It would take guts of steel and solid faith for sure, but if you believe in the company, I myself, I truly believe in Google, unless Elon Musk's and Microsoft's Chat GPT. Have you ever heard about that, Wowie? The Chat GPT?
Yes, I actually tested it and asked it some questions about which stock is good to buy right now, and it would not give some
Yes.
advice,
Yeah, it wouldn't.
just like we do. So
So,
smart AI,
mm-hmm, definitely.
uh, yeah, it can write codes. If you are a coder, you could, but you can double check the codes that it will write for you. It will write essays for you. So unbelievable.
Yeah, what
But
they're saying.
verify,
Mhm.
yeah, but
Yeah,
verify some of the information it will provide is untrue or not based on fact. So you got to read what it's writing.
right. Well, some say it could eventually replace Google, but I think it's going to be a long shot for it to do so. So, believe it or not, fund managers are predicting a better year for stocks. Some bright news, some positive news in the coming year. This is pertaining to the global stock market, not just the US. So, a survey prediction we can bounce 10% globally, according to this Bloomberg next survey next year. Well, I guess that kind of does it for this week's episode. If you're still with us, I appreciate it. Me and Wowie, do this once a week. So I hope you guys like it and subscribe to us.
Yes, please like and subscribe and watch us again next week. Let's see if we are to have a Christmas rally.
Yeah. And Wowie, you're going to the Philippines soon, right? Or
Yes, I'll be leaving at the end of this month and we'll be going
wow.
back home.
Wow, finally. How long has it been since you
It,
went?
oh, I haven't been home since COVID started.
Oh my, been 2 years, huh?
Hmm.
Well,
So it'll be nice.
one thing I could tell is that my experience there as I was doing my traveling, me and my girlfriend, we noticed how things have changed and things have remained the same at the same time. So traffic, it's always been traffic in Metro Manila. Here in the US, when I go to work, I live like 5 miles away. It just took me 7, 8 minutes to get to work at 5 miles. In the Philippines, in a rush hour, well, a rush hour here might take me like 15 minutes, double the time for 5 miles. In the Philippines, I had to travel 7 miles in a rush hour, and it took me an hour and a half stuck in traffic. So,
They're they're building all these trains in the
yeah,
Philippines, so it may decongest it some,
there are
just
lots of
some.
bridges being built and a lot of way road widening but you definitely have to carry with you a lot of patience still.
Hmm.
Yeah. And you know what I noticed too? Like on the crossings, because I never used to drive in the Philippines when I was still there, never owned a car. But now that I have rented a car, whenever there's a stoplight, especially if you stop close to the crossing, expect like give it a minute or two, and next thing you know, you'll be swarmed with motorcycles left and
Hmm.
right and in front. And
Hmm.
these guys, they already anticipate you giving them the right of way. So
Hmm.
just take care driving while we over there when we're in the Philippines.
If I ever drive, I have not driven in the Philippines in a long, long time.
Oh,
Yeah. So I usually get a grab or somebody else will give me a ride when
oh,
I'm over
gotcha.
there. Hmm.
Yeah, Grab usually though, just to give you a heads up, it might take you a while. I've seen
Hmm.
some people struggle getting Grab because they don't have any competition, so their
Hmm.
service sucks. Basically, they're like Globe or PLDT over there. They cancel, and I have
Hmm.
set up a group dinner with my buddies back in college. He was about just 3 miles away from Makati Medical Center to the restaurant that I have reservations, and no Grab driver picked him up for at least
Hmm.
4 hours, and he had to, you know, not go to the meeting. So
And
just a
that's
heads
what
up.
happens when there's no competition. After they remove Uber from the
Yeah,
Philippines, Grab took a hold of the taxi service.
yeah, and
That's hard. That's kind of sad to hear because
mm,
about 4 years ago, Grab was still okay.
yeah, Grab, and I think it's Angkas right now. Who's
Hmm.
But Angkas is kind of different because you have to be on a motorcycle, so that's a little bit
Hmm.
risky side. But yeah, let us know how your trip goes next week, Wowie, because we're gonna
Hmm.
miss you here.
We'll keep you posted, and I'll bring my phone, and I'll stay updated on what's going on the market.
Yeah. Well, thank you for doing so, Wowie. And I guess that all does it for today's episode 65.
Hmm.
Again, this is Mark. You enjoy,
Wawi
guys. You
Santos.
enjoy your weekend. Signing out.
Enjoy your weekend, guys. Like and
Bye.
subscribe.
Like and subscribe. Bye.
Bye.